So, I saw this article from the Straits Times the other day talking about the economic trends to watch for Singapore in 2025. And it made me think maybe it is a good thing to talk about such trend at the beginning of the year, and then let's see if it happens at the end of the year. Just to see if we as human beings are actually good at such prediction or speculation, as per what I like to coin it as. And also, maybe I can try to look at it from a global perspective as well. Without further ado, let's get into it. Back with me again, Daddy with That Money Compass. So if you haven't read the article already, I had already done it so you don't have to, and I also have summarized everything at the end of this video. To give a bigger background, I have to say that the world is just not doing as good, and not only the environment is getting warmer and warmer, there are also conflicts and tensions all over the world, with each country has their own issue. I don't usually follow the Europe economy, but we can see that they are not doing very good. The UK as well still has ways to go, and Russia and Ukraine, their conflict is still ongoing. Now, with President-elect Trump is going to step in this month, there is a renewed concern on the US-China trade conflict. Basically, we can see geopolitical tensions happening here and there, which may lead to market volatility. Considering how Singapore is supposedly pretty neutral on the US-China matters, people would naturally expect Singapore's economy would be rockier in 2025, considering how we are going to be pulled on both ways. On top of that, we have the crypto world. The way I see it is that analysts probably have not found any concrete use cases in crypto yet, and these also include people from the regulators as well as the people from the older generations. Personally, I see that the younger generation seems to embrace the crypto world better than the older ones. I recently have someone as young as 20 years old ask me to teach her on how to trade crypto despite her not having any knowledge about investment, trading, and everything else. When I asked why and what caused her to be interested in the subject, she simply mentioned how she has a friend who is in Bitcoin and the friend is seeing profit due to the recent run-up. Meanwhile, speaking about crypto, I also see that a lot of the institutions are now racing on who would be the front runner here before Trump is officially announced as the president. Hence the crazy purchases of Bitcoin almost every week by different companies, which includes banks too, if I'm not wrong, due to their spot ETFs. And again, of course, we are not the front runner here, as Singapore seems to be taking the cautious approach, but here is the thing. Once Bitcoin is owned by majority of companies in the world, it will be expensive, just like gold, or maybe even more expensive. And with the latest news that Russia is embracing crypto and making Bitcoin as international payment currency, let's see how far this can go. However, I also see that this probably will only be legit in the long term instead of the short term, because I still see more traders than investors here. Additionally, the retail investors like you and me, they seem to be on the sideline here. So if there's one saying that I feel that is proven here, is that smart money really does go in first, and then the dumb money follows. Back to the article. So our Ministry of Trade and Industry, or MTI, has given the forecast that real GDP growth will be around 1 to 3% instead of 4%. From my point of view, regardless wherever it is, this has always been the average range of GDP growth, if I'm not mistaken, so there's nothing special here. But here are what the article said to watch out for in 2025. So, number one, trade war escalation. US President-elect Trump vows to raise tariffs at 20% for all trading partners and 60% for China. Even if Singapore manages to avoid the tariff increase, considering how we are an export-import country, this will still be unfavorable for Singapore. Also, it says that with US, China, and Europe, who are basically the world's three major economies, going into trade war, this could reduce Singapore's GDP growth by at least 1 percentage point. This will make US goods pricier overseas, reducing demand and straining trade relationship. So number 2, China's economy slows down. So Asia, which includes Singapore, is perceived as more susceptible to the economic performance of China. You know where this is going, right? Yes. If China is not doing good, Singapore can be affected as well. But apparently, the potential economic slowdown is not because of the heightened trade war with the US alone. I don't usually follow China news closely, but it says that apparently there is insufficient domestic consumption currently following a government crackdown on the real estate and tech sectors, which happened quite some time back, but the impact seems to still be lingering. So on top of that, there is rising unemployment. This affects the demand, which means it will reduce. So with the increasing tariffs from the US and potential EU curbs, this overcapacity from China manufacturers have to go somewhere. And it seems that they will probably go for Asia. But this can cause trouble to Asia as well, which include trade deficits, pressure on corporate profits, reduced domestic production, and less incentive to invest in capacity expansions. Yes, I mean, if there are stuff coming in for cheap, why bother to improve the country's own capacity and capability, right? So either way, this just doesn't seem good to China. On top of that, I also see that investors' confidence towards investing in China seems to be not recovered yet, with some of them being, nah, I ain't gonna invest in a country that is this unstable and unpredictable. This is also why if you have known any investors that have invested in China market for the past years, they are likely unhappy about it whenever you try to raise the topic. So number 3, inflation and interest rates. Higher tariffs means inflationary pressures for us, and with this much pressure, coupled with strong economic growth in the largest global economy, there can't be much slowdown happening. On top of that, if you have followed my inflation report post on my Instagram, the rate seems to be rather stagnant now, or what some people call it as sticky. With all the hype that's going on and all the promises that Trump made, analysts have concerns on how the inflation may grow instead. And true enough, the US Central Bank has signaled that they may only implement 2 0.25 point cuts instead of 4. Also, they have increased their inflation forecast for 2025 from 2.1% to 2.5%, which is way above their 2% target. Like, yeah, definitely is way above. As such, at least in the short term, we probably won't see Singapore's rate to be down by much as well. Property loan, yeah, don't hope to refinance anytime soon yet. Number 4, strong US dollar. With higher interest rates staying for longer, this would mean stronger US dollar as well, as much as it seems that this may affect the US exports due to them being more expensive. This also means all other currencies become weaker. For Singapore, if currencies are weaker, demand could be lower due to stuff being more expensive. Hence, this could affect Singapore. And what a pain it really can be. For you, if you have investment in the US markets, wouldn't you feel a bit more painful when exchanging your SGD for USD? Now, our SGD can be stronger as the MAS has the flexibility to control it, but the MAS cannot just adjust our currency to be strong, as this may affect all other trades and hinder exports and subsequently the economic growth too. So it is really a pain after all. So number 5, financial market volatility. Yes, I've mentioned about this here and there previously, but we all should have known that US market has run up like it is forever blue sky, Of course, there are signs that investors are becoming concerned over such rally, including me. But the market can be irrational as well, just like now, as whatever past indicators seem to be not working. So that also means if a sell-off happened, there would be a mother of volatility. However, with the strong USD, we can see all start parking their money in the US money market, which may worsen all associated problems such as higher inflation and interest rates and lower growth in trade-dependent Asia. This also why, on one hand, I actually feel that Trump is a good businessman. Number 6, geopolitical conflicts. The one macroeconomic that can affect all sorts of policies and everything else. On top of that, it is often an unpredictable risk, but the article seems to say 2025 may be a very disruptive one. So number 7, commodity prices. Another asset that is often affected when the macroeconomic is not doing well and in the presence of geopolitical conflict. We have all seen how COVID had affected this due to limited production, overflowing supplies, which lead to low prices, yada yada. Simply said, the effect will trickle down to you and me, and once again, we will find sellers looking for all excuses to raise their prices, and we will pay for them again. 8, supply chain rewiring. I'm not an expert in supply chain, but companies will find ways to still export their stuff because companies need cash flow to survive where there are obstacles. So according to the article, this may happen, but for the certainty, it is still unknown. Number 9, tech war. This refers to semiconductors and advanced technologies. Basically, in this day and age, technology has become a thing, and so is IPs and patents and all sorts of secrets of developing chips that are increasingly becoming important and integral to our daily lives. Actually, we can already start seeing this whereby the US president has been trying to block Nvidia or AMD from exporting their GPU stuff to China. So if China would block the natural resources export, US would block all this smart advanced technology just to cripple the rest of the countries that may depend on them. We all know US is number 1 in the tech currently, but what's new when all the geopolitical conflicts going on for the past years, am I right? So last one, number 10, emerging market risks. To make it simple, with all the big boys fighting, the weaker ones will often get affected, right? Maybe get affected by a lot. Why? Due to their weaker macroeconomic fundamentals. With that said, it may seem a lot, but let me summarize to you further. Whatever that is happening in 2024, it will continue to 2025. With the introduction of President-elect Trump, things may get worse or get better. There will be trade war escalation. Until there are some sorts of solutions, this will happen as Trump is a man of his words, at least according to me, being him a businessman. This will lead to potential increase in inflation and interest rates, China's economy slowing down, market volatility, and potentially more geopolitical conflicts. This also means there could be a stronger US dollar, but heightened emerging market risks. Additionally, with trade war escalation, this could lead to other kinds of wars like commodity blocking, which may increase commodity prices, and tech war. Now, how can this affect you and me on our normal life away from all these investing economic matters? Simple. Don't expect to refinance your property loan to a cheaper rate when banks may still be expecting a higher rate for longer. Your food may increase again by another 50 cents or $1, for example. Restaurants or other services may charge higher. And ultimately, companies may find things in the world being too expensive, and in order to maintain their margin, they may slow down their hire or even cutting more jobs, which translate to higher unemployment rate. Hopefully, I did a good job at summarizing and getting this across about our Singapore global trend in 2025. If you have any questions, do leave them down in the comment section down below. And if you find this good, consider supporting me by liking and subscribing to this channel. With that, what's important is how you can navigate and flow no matter what is thrown to you. So I hope we all could have a better year ahead. And with that, stay hydrated and catch you on the next one. Peace.